Good morning and happy Monday. It is July the 24th, and this is the Market Prep. My name is John Hoagland. Thanks for trusting me with your time. As always, we seek accurate context, always remembering risk management and remaining patient in our trading today. I hope you had a nice weekend. Don't forget, there was a rebalance of the NASDAQ. It doesn't seem to be scaring things here too much so far this morning, but it is still very early. As far as economic numbers this morning, we had the Chicago Fed National Activity Index come out, 845, the PMI composite. This is the July preliminary. It's the flash of the PMI. It's an estimate of it. We also have the rest of the week to contend with as far as economic numbers. So on top of the rebalancing of the NASDAQ, we've got a lot of economic numbers. We know that we've got the FOMC meeting this week. And perhaps into next week, we have another horseshoe being thrown into the works here with a possible UPS strike. The Teamsters perhaps striking against the UPS perhaps the beginning of next week from what I'm hearing. And that could certainly throw some shade on our supply chains. So a little bit of new uncertainty in the markets. Perhaps we'll have to see how all of this plays out. Of course, we're all hoping for a resolution of this before anything like this has to happen. So what are we looking at as far as economic numbers this week? Just to run through, we've already discussed tomorrow the FOMC meeting begins. We've got Case-Shiller home pricing, FHFA home pricing index due tomorrow also. We've got consumer confidence tomorrow. That's at 9 a.m. along with the Richmond Fed manufacturing index. Wednesday, new home sales, of course, EIA petroleum status report as usual, and then the FOMC announcement at 1 p.m. Central, and the Fed chair presser at 1:30 Central on Wednesday. Thursday, durable goods orders, GDP. This should be the first estimate of second quarter GDP. International trade in goods, jobless claims as usual, pending home sales, EIA natural gas report, and then following things up on Friday with personal incomes and outlays, PCE. This is the big one that the Fed seems to favor when thinking about changing interest rates. Good thing it's coming out after the FOMC meeting this week. And then we've got employment cost index, Michigan consumer sentiment, and the usual Baker Hughes rig count near the end of the day on Friday. Hopefully by that time we'll be standing on stacks of cash and done for the week before that one comes out. Probably not going to be hugely impactful, of course, but that's where we are. So NASDAQ, looks like our equities are feeling pretty good today, ready to start a busy week with earnings and in an optimistic stature. Looks a little bit cautious of this morning, but of course, here's the earnings that we're looking at this week. Chevron today beating both expectations for earnings and revenues. Tuesday, just the big ones. We've got a long list of earnings this week, but just kind of focusing on the most impactful. Tuesday, Verizon and GE. Tuesday morning, Microsoft, Alphabet, Visa, all due out after the close on Tuesday. Wednesday, Coca-Cola and Boeing before the open, Meta after the close. Thursday, MasterCard, Nestle, and then after the close, we've got T-Mobile and Intel. And then to wind things up for the week, early on Friday, we have Exxon. Of course, the list on Friday is much shorter than the rest of the week. So we're really getting into the teeth of the earnings report. Okay, investors have already, I think, factored in a 25 basis point rate hike on Wednesday. That is the larger view of that. And so we're going to just see how this week plays out. Mondays, usually slow starters for me. And we're going to probably be the same way here this morning. We're taking a look at the VIX. So it's up about 5% this morning. So there's a little bit of a fear coming back into the market, but it's still only 1428. It's 1378. Yeah, on Friday at this time. The dollar index 101.2 was 101.0 at this time on Friday. And the yield on the 10-year really remaining very steady here at 3.8%, 3.81%. These are last time I checked just a few minutes ago. So probably nothing really changing all that much. As always, I ask that you make sure and hit the lucky like button, share, comment, question, feedback, heckling, love are always welcome here. Don't forget to subscribe to our YouTube channel so you get notified when we do go live. We are going to be making some changes to the market prep and everything we're doing here. We're getting closer and closer to being able to bring Top Step TV to you. We are looking very much forward to spending more time with you, and we'll be talking a little bit more about that as the week goes on. Scott saw and he conquered this morning. First in the room, winning the prize this morning. Good morning to you, Scott. Tachyon, Dan Trader, Caprice, Nameless Trader, Theo, Jacob, Duke, Josiah. Good morning, Matthew, Futures Trader. Good morning. Lacey says good morning to everybody as well. Shaw, Lacey says good morning. The Rooster crowing here early. Good to see you this morning. Futures trading today. There we go. He was missing his wake up crow from the Rooster. Futures trading. HPAC Communications. Good morning. NASDAQ. Haggle Matters. My pleasure. You know, if you ever want a recording of the group coaching session, you just email me and I'll be happy to send it to you. I'm glad you found that it was useful for you. As a matter of fact, we're talking about group coaching. We're having group coaching today at 12:30. I just put in the link so you can register if you're not already registered. I think we've had some really good questions and some really good sessions lately, and I'm really enjoying doing those with everybody. Shaw, good morning. Where am I here? Hagelman. Okay, here we go. George Lacey, the center of the universe, also says good morning. But there may be a twist in the universe for Lacey. We were at a softball game my son was playing today, and one of the other moms fosters dogs. And there was a puppy there that my wife fell in love with. So we may be a 2-dog home soon. I don't know. We're going to have to see how it plays out, but Lacey may have a buddy to hang out with, which would be great. Bill, good morning. Dustin, happy Monday to you. Jay, oh, I got lost here. Travis, got lost. There we are. Jay, Jason, Terry, Rusty Golfer, my spirit animal. Michael, Will, good morning. DeSobel, good morning. Jason, good morning. Timothy, JD Royalty, good morning. Nameless Trader and Leslie, good to see everyone. Travis, Trading Research, David Buttons, Dr. VJ, good morning to you. Lisa FVB, Shy T. Joe, good morning. The word for today from Joe is consistent. Consistent. An excellent word and an excellent goal for just about everybody in trading. Teo, good morning. JT, good morning. Bluebell to you too. Worked hard to learn those letters. There you go. Anise, good morning. Orion, Sarah, Will, Insight. Looking forward to group coaching today, as am I. Coulter, good morning. Fire Angel and John and Andrew and 90 but even Stephen, James, my brother Rick, the Randolph to my Mortimer. I love you, buddy. It's good to see you this morning. Rob T, Zistel, good morning. The video as well. HPAC, if you are looking for the group coaching. Let me I got to kind of henpeck it here. I got this microphone ahead of me, and I'm going to put the email in here for you. And if you want the recording of any of the group sessions, I keep them for a little while. They're still available for a little bit. You can go ahead and email me there. Okay, you got the link, or you should have the link. Yes, there it is for group coaching, and I look forward to seeing everybody there. All right, two dogs are the best. Herd animals, there you go. Arsen, good morning, futures. Am I coming to the meetup on Saturday? I don't know yet. I don't know for sure. You keep asking, and I will let you know closer to the end of the week. Insight, yeah, that's something that we can certainly look into during group coaching. I think a lot of folks do have kind of some unrealistic expectations as far as what they're earning, especially as new traders. So certainly we'll look forward to talking about that in group coaching. Make sure you remind me, just ask that question again, because I may forget by that time, but just to definitely let me know that you are still interested in that question. And I think I'll have some useful and thoughtful insights into that. Everybody wants to be a big trader. Everybody wants to make big money, but a lot of people won't or haven't done the work in which to do so. And you don't have to trade big. You don't have to have big winning days, because your losing days are going to be big as well. Be happy to talk about that during group coaching again, Insight. I'm looking forward to seeing you there. All right. So I think we've taken care of business. Earnings, economic numbers, rebalancing of the NASDAQ, and a potential Teamster strike against UPS the beginning of next week. Hoping that doesn't happen. It's going to throw a real horseshoe into our supply chains, and we don't want that, right? Okay. Well, let's jump into the charts. Let's take a look. We'll start here with the E-mini S&Ps. Now, one of the things that, excuse me one second. Thank you. One of the things that this chart says to me is, yeah, we are in an upside move. We have had some pullbacks. That's healthy for the upside auction. Friday, we had some liquidation, okay? We lost 2,200 in open interest in the total number of outstanding contracts. But we had an inside day. So Thursday's low and Wednesday's high have established the range, really, that I'm kind of interested in seeing this market hold. That inside day that we put in on Friday just kind of says, okay, we've pulled back. We're going to digest here a little bit, and we're going to see what happens during the week. Now, remember, there's a lot of traders that are going to be positioning, exiting their positions, hedging, and posturing for anything unusual that might come out on Wednesday. And then, of course, we know, we've got the PCE numbers on Friday that could also be a little bit of a disruptor to these markets, and everything else that's going on that could be a disruptor to these markets. But these equity markets are also extremely resilient. So with the trade liquidation here on Friday and the market unable really to kind of bring any direction in, we start the week in balance. Wednesday, there's an excess high here on the daily bar. Okay, this is a little bit ominous for continuation to the upside. We were actually looking at the idea that the upside auction was getting a little bit tired and could use a pullback in order to continue an upside move. The market gets too long to rally. I know that's kind of kind of hard to understand. But when everybody's already long, there's nobody left to buy it. There needs to be an adjustment of inventory. There needs to be a liquidation. And I think we began to see that on Thursday as well as Friday, but it has not really driven the market lower. It's just a little bit of a pullback. And I'm still calling this upside digestion. There's, lots of different market states. Some people say there's as many as 24 or 26 market states. I think that just complicates things, but I'm going to call this an upside digestion. So Friday's inside day establishes that balance. Thursday's low, 45.57, is a level that I will kind of be eyeballing to see if the market can hold above it to stay in balance. Acceptance down below it, I think we may see some more selling coming in, and then we've got this 4,500 big fat round number below that. Any acceptance below that, and I think we're facing possibly a bigger market state change. I don't forecast that to happen. My only job is to try and keep the market in context and look for asymmetric opportunities where I can lose less than I stand to make on any trade. Here's the 30-minute chart. So here's that range from Friday, right? Here's Thursday's range coming off the high, the excess on the daily high. We had that head and shoulders that we kind of finished on Thursday, and Friday we were range bound. Value inside value from the previous day. A little bit of repair actually is what happened here on Friday. And now the market is opening back in value. Is there a long overnight inventory? If there is, it's largely reconciled because we've been kind of consolidating in this area. We've had a pullback already. I'm not going to be counting on overnight inventory for any early opportunities today. And the fact that we're opening in range and in value also puts me back in my chair to say, okay, I can relax. There's probably a better trade location today. And if there's a change in the market state, I'll be ready for that. I don't want to get chopped up here in the middle and lose any opportunities that may happen if things change as far as the balance is concerned. Take a look at the there are, again, a lot of focuses this week. I'm going to try and stay patient. My goal for the week is finish the week better than I started it. That's it. So here we opened here. We traded to both kind of assumed points of control in these areas of balance. Wasn't a true double distribution trend day, but there were two defined areas of balance, and we traded to both of them. And here we are, still inside range and still inside value. We have low excess high. We have a poor low. The auction just was facilitating trade here on Friday and allowing people to adjust their inventories without having to pay a lot to do so. This profile graphic does indicate, the ability for the market to facilitate trade. We've repaired a lot of this. It wouldn't surprise me if price went looking for new areas of participation. It used a lot of it here on Friday, used a lot of it here on Thursday. We repaired all of this. Market's preparing for a move, but it may not happen till Wednesday, could happen on Friday, may not happen at all. The market can just decide it wants to digest here and take a rest for a little while. Here's the TP. There, we've got the TPOs up. Little anomaly here. There's not a lot of confidence in a lot of this activity. So it just seems to me that I'm going to be remaining patient and looking for better trade locations as the day goes on. This poor low is a little bit worrisome for me. Here's the NASDAQ. So the NASDAQ pulled off deeper. This level right here in the S&Ps would be that 4,500 level. And we're getting close to that level, just technically because of these highs here, and the breakout above that. So really just kind of looking at 15,500 perhaps as that same level of as the 4,500 in the S&Ps. Last week's low came on Friday, and it didn't close well. So there's a little bit of more doubt. And of course, with the rebalancing of the NASDAQ, it's going to take a little bit of digestion for this market to settle down and get back to business, which is building value when price continues to roll higher unless something goes wrong. So Thursday, the rebalancing on the doorstep. Friday, losing 5,800 in open interest on Friday on lower volume. It makes sense. It's a weekend. There's a rebalancing. I don't want to hold any positions, so a lot of folks did liquidate those positions, and they're now available to get back into the marketplace. All right. So here's, the move, a little bit of repair, right? We'll see this better, I think, on the profiles. High to low throughout the day, nice pullback, losing open interest. This is just people positioning for what's going to happen this week. Again, the market maybe holding a little bit long as far as inventory is concerned, but all of this congestion here, this digestion, does a lot to eat up overnight inventory. It does a lot to even inventories, and we're going to be opening looking like we're in range and in value. Last week's low is going to be somewhat pivotal for me. And what else do I have here for you? Yes, let's take a look at the TPO chart. So there's Wednesday's excess, repair, normal variation, very wide profile. Market is likely to look for new levels to facilitate trade, but there's a lot of weak structure down below here. I think the NASDAQ is at greater risk of a deeper pullback than the broader index, the S&Ps. We've got a gap that remains unfilled here, naked point of control, another gap that remains unfilled here, another naked point of control. There's a lot of kind of weaker structure down here, and it's going to become important when it becomes important. We could turn around and rally and never come back to these levels, which is highly unlikely. But just the knowledge that they're there, if price starts heading this direction, it gives you some pretty decent targets if you're already short, and some possible interesting areas for executions if you're not. Crude oil. All right. The longer time frame move, has been to the downside. We see that the moving averages have been moving lower. The 50 session has now moved up. Okay, it's now pointing higher. The 100 session is even. The 200 session has flattened out as well. The short time frame auction process that we're currently in is looking actually pretty good. We added 13,000 in open interest on Friday alone. The rollover is now over. We're seeing a little bit of volume falling off, but the open interest continues to come in, is encouraging. 78.20 is our weekly kickoff high. We've already kind of taken a look at that, perhaps in the overnight session. Take a look at the 30. So here's our opening. On the open, we took a stab up at that 78.20 weekly kickoff high. What is a weekly kickoff high? These are levels that I calculate that tell me that price is getting to a level where longer time frame traders will probably even be forced to adjust inventory. So these are important levels to me. We've opened with a gap. Overnight inventory is long, opening with a gap. The market trying to continue to move higher. If it can't, the first move will probably be, as Michael calls it, the settlement play, back to settlement. Where did the market open last night? Relatively close to settlement. So if the overnight inventory gets spooked, they can move price back down to this level, which could give us better trade location for anything we're thinking about doing. This purple line is last week's high. We find acceptance above that. We can't close the gap. Then we look for a test of weekly kickoff high. If we can't hold above it, we go the other direction. If we get above it and the market is exhibiting acceptance, that's time, volume, participation, and momentum, then we'd have to go with it. So we've got an interesting situation going on here in crude oil. Here's the TPO chart. Low excess low, low excess high, but a normal variation trading day that kind of says that the market is going to seek new levels for auction to attract participation. We're talking about this weak low here, which is weak structure, but it has not come into play. We have excess low here. We have a late spike that showed signs of acceptance is now rejected. So we've got a gap. We're gonna work the gap rules. And what are the gap rules? If price can't close the gap relatively early. I know that's a subjective term, but if it can't close the gap relatively early, we look for opportunities in the direction of the gap, which could put us to a test of our weekly kickoff high at 78.20. Acceptance above that, there is space. Gold. Okay. Look where we are. Look at the, this is the daily chart, of course, right? We have, there we go. This is the 200 session moving average. It was supportive back here. 50, the 100, they've crossed over. The 50 is our low. The 100 is weekly kickoff high. These are nice looking little levels for potential opportunities, right? Is this creating a bull flag? Take a look at the 30-minute. If it is, it's potentially breaking out to the upside. There's naked point of control, weekly kickoff high above, little bit of weak structure down below here, and then there's a lot of space down below that to our weekly kickoff low, this naked point of control. We opened. We do not have a gap. Let's take a look at the TPO chart. We do not have a gap. Normal variation trading day, excess low, price is starting to look for new levels to facilitate trade. All right. Take a look at the euro real quick. So big up move, big move down. Obviously, we really didn't change open interest at all on Friday. It's absolutely moot. Less than 100 change in open interest. What I do find interesting in this is trying to judge the auction process by volume. It's been cutting off volume to this point, but look at the volume today. If this is correct, today may be a pretty high volume day. Take a look at the 30-minute chart here. Right, opening overnight inventory, short reconciled, no gap close. No gap close. 730 is right here. So we opened. We've been unable to close the gap, which would have us looking for continuation of the auction process to the downside. And this has been a pretty healthy. We did leave a naked point of control here and here, but no gaps on this pullback. Seems relatively healthy. Got a gap to fill here, naked points of control down below for visual targets. And if traders and investors are focusing on those visual targets, they will eventually bring price there. Here's the TPO chart. Excess, 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 excess. Upside auctions are completing. Downside auctions, well, we do have excess, but we are one time framing lower in the day time frame. No gap close here. Again, if we can't close this gap, we're looking for opportunities for continuation to the downside. Take a look now here at the 10-year. relatively central, and as far as location is concerned, with weekly kickoff levels, they've tightened up a little bit as this market has begun to consolidate here. Volume and open interest on Friday were moot. We pretty much, we lost 13,000 in open interest, but volume was very, very slow. Everybody is waiting for the FOMC meeting. Last week's low, last week's high, or weekly kickoff high would be the extremes of the area of balance. And if we're trading balance to breakout rules, we're looking for opportunities only at the extremes if given the opportunity. Now, that's in my time frame. There may be opportunities you might find in a smaller time frame that would give you the opportunity to limit risk and have a bigger profit target, but it's not really my thing. I don't trade the 10-year that often, but to me, market is an auction, and every auction is the same. Buyers are going to buy it until it's too expensive. Sellers will sell it. The new auction to the downside begins as soon as it's too cheap to sell. Buyers will pick it up, and the whole process repeats itself over and over in multiple time frames. So we've got overnight inventory pretty long here. Look at what we're doing already. We're pulling off those highs. We are taking all of these overnight longs and scaring them. They could bring price all the way back down to settlement. That's the settlement play, right? All right. So it looks like some good conversation going on here. I'm not going to have the time to go too much into some of these questions, but you guys, you really have to be careful about outrageous claims on internet educators. I'm not making any claims. I'm just talking about the context. The rest is up to you. We are looking forward to your success. So let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Looking forward to seeing you all for group coaching at 12:30 Central. Again, the link is in the chat. I can put it in there again here if you're interested. Go ahead and hit that link, and we'll look forward to seeing you there. Otherwise, trade well today, and we'll see you tomorrow morning on the Market Prep.